Firms are dumping office space. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from Commercial Real Estate, which is discussing pandemic-hit firms are dumping office floors on subletting markets. Now, we've started to see discussion of this more and more. I even had some viewers reach out to me. One who was an engineer down south was telling me one of their biggest commercial clients was cutting 20,000 square meters, really significantly decreasing their floor area. I suspect, and maybe this is just the cynic in me, that a lot of businesses are going to see this as an opportunity to reduce their commercial footprint, the square meterage that they need, because that is a big cost for businesses. You know, if you can get people to work from home, you can get people to use their own IT equipment, even without. You don't need to pay that rent. You don't need to pay that power. You don't need to pay the other costs associated with going in a big building. And they can be quite expensive, everyone. So it's going to be interesting to see how this manifests. How this manifests in, well, the real estate investment trust for one. We jump over here. Here's Centuria. This is one I just found. Centuria offers REIT. ASX COF offers investors a chance to invest in commercial property via a real estate investment trust. I'm just going to turn off my noise suppression. Let me know if you can tell the difference. Via a real estate investment trust. COF is Australia's largest pure play office REIT and is included in the S&P ASX 300 index. COF has a geographically diversified portfolio of 23 high-quality assets with a value of $2.1 billion. The portfolio is predominantly exposed to metropolitan and near-city office markets and are well-connected to transport and lend themselves to affordable rents. So the primary objective for COF as a real estate investment trust is to generate sustainable and quality income streams by executing initiatives to create value across a portfolio of quality Australian assets. And you can see here, let's have a look at some of their portfolio. You've got St Leonard's, Chatsworth. I'm seeing if I recognize any of them. So some medium quality to higher quality buildings with a variety of people going into them. What are their occupancy rates? 100%. Oh no, their ownership. They don't have their occupancy rates here. You can see here the ACT. What do they have? Is Brisbane, Sydney, Western Australia, ACT. One thing that's interesting, occupancy rates didn't take a hit at the last recession. I'm trying to bring the data from the Property Council data room. You can see it quite clearly here. It's not working for me at the moment. But if you want to see the office vacancy rates, you can see how that they didn't plunge in Canberra. Every other city they plunged in the 92 recession. And they've got some stuff here in Queensland. Oh yeah, Fortitude Valley, that's a nice one. I know that one. Melbourne Street, yep. There we go. Oh, okay, they've got 100 Brook Street in Fortitude Valley. So nice. They've got some nice quality buildings. Some nice quality assets. So how are their shares doing? They're $2.15. And let's go out to 6 months. And they really haven't been. We'll go out to a year. Okay, they copped it here. So their previous close was $2.13. Their 52-week high is $3.30. And their 52-week low is $1.38. So their dividend yield is 8.13%. So the question is this discussion in the media of businesses that are dumping floors or unseen office floors, is this going to be a long-term trend? Are we going to start seeing a shift away from commercial offices, or is it just a short-term thing? Or are they just, finding ways to take advantage of the situation? Maybe these are businesses that were already in trouble that wanted to look at downsizing or, getting out of leases, finding a way to save some money. Or is it businesses that are, struggling? And are these going to be good investments in the future? 8%, not a bad yield compared to some of the others. So let's have a look at this, guys. So, unwanted and empty space in Australia's East Coast offices is causing a serious rise in sublet vacancy, adding to uncertainty about the prospects for once thriving city towers. So notice how Centuria we looked at, they didn't have that many towers. They had a few big ones, but all of them are a little bit lower. So your cost base on going somewhere like this, out of Robina, would be a bit less than going to something right in the middle of the city. So, because you'll have offices. You'll have businesses that'll move from a AAA rated tower to a lower quality tower or a lower quality building. You've got different grades of buildings. I need to go through that again. The book I have from the Property Council is so out of date, but it still would be useful. It's things like, if you have a generator, that can affect the rating of your building. A generator there to ensure that you'll have ongoing power in the tower. The quality of the lifts, if you've got other spaces and amenities and just floor area. So, pandemic hit companies are dumping unused office floors on the subletting market, accelerating a spike in empty space across Sydney's prime CBD office towers. So, could it just be the prime quality stuff? They're going to cop it first. Will it flow through to the low quality market and pushing vacancy levels above the peak seen during the GFC? The race to downsize is adding fuel to concerns about rising unemployment and the looming wind-back of JobKeeper, rising office vacancy rates and falling net effective rents, prompting a bearish response from investors. This week, analysts at Morgan Stanley downgraded the $9.5 billion ASX-listed office landlord Dexus to underweight. They questioned whether the office party was over, a position not welcomed by all. We have gotten some pushback on this call, and it seems like the market remains divided on how to be positioned in office stock, analysts Simon Chan and Lauren Berry said. We remain comfortable with our cautious view, they said. About 135,000 square metres, or 2.7% of Sydney's total CBD office stock, is for sublease, according to research from global agency JLL. That figure is above the level seen during the GFC of 2.2%, but well below the record set during the 1990s recession we had to have when it hit 6.2%. I mean, this is going to be Paul Keating's legacy forever, isn't it? Everyone will forget about Super and anything else he did. It'll be recession we had to have. I guess since we're in the first recession since then. What will they remember this? The recession we foolishly created. Will that be the recession this will be remembered as? Nearly half of the 123,000 square metres of sublet space JLL is tracking in Melbourne CBD, about 44%, is directly related to the fallout from the pandemic-induced economic shutdowns, the agency estimates. Additional sublease vacancy is likely to come online in both cities in the final quarter of the year as occupiers start to make critical decisions about how much space they need, research analyst Sam Craig said. Until now, businesses have been waiting to see what the new normal post-pandemic economy will look like. Heavyweight office chiefs this week urged businesses and workers to stop working from home and return to city offices, with Dexus's Darren Steinberg, Brookfield managing partner Sophie Fallman, and Blackstone's Chris Chianen, and WeWork Australia's general manager Balder Toll leading the charge. WeWork still exists? I mean, there's an interesting model. 2/3 of Sydney's sublease vacancy is concentrated in prime grade building, with the remainder largely in B grade stock. So most of it is in the prime grade, and there's some spilling over to B grade. So I bet you there'll be some people that will go out of prime and go to B. They'll go to B. White collar professional services, 19%, financial services, 18%, and insurance and technology sectors of 14% are driving the contraction. On the upside, though, large office landlords are reporting strong rent collection and stable book values compared with retail counterparts. So that's the difference. Retail is copying it. But are people going to still... There's the question. Is this going to be a long-term move? I mean, people like working from office. They like getting out of home. It psychologically makes a difference. It has a different perception. Well, we'll have to see. We'll have to see. Companies typically view office leases as short-term fixed costs and long-term variable costs and adjust their requirements broadly in line with the size of headcount of their business. As unemployment rises, so does available sublease spaces. A reasonable portion of subleases available in Melbourne are time-constrained, restricted by firms' desire to grow back into their office once conditions improve, JLL's Nick Drake said. While sublease availability will be attractive to some businesses, many organisations will continue to gravitate to direct lease opportunities, he said. A direct relationship with the landlord reduces risk and increases flexibility and tenure. Mr. Chan and Ms. Berry think tenants have yet to work out where they stand on the work-from-home issue. A bounce back is unlikely in the next 12 months, they think. We think the most pressing issue And what will drive share price performance in the near term is the cyclical pressures as Australia heads into a post-COVID recession. So what do you think, everyone? 12 months, they're saying, until we see a bounce back. It'll be interesting to watch and see how these real estate investment trusts go. They're managing to collect their rent. What happens when that starts to take a hit? As always, everyone, please let me know your thoughts and opinions in the comments below. Please like, share, and subscribe to the channel. If you're a fan and want to support the content I create, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, guys. Have a great day. I'll see you in the next episode.